Remortgaging 101, what you need to know before you start. So a lot of people, this is their first time remortgaging, so they're not used to it, or they remortgaged years ago and things have changed. So this should cover everything in a nutshell just to help you. So my name is the Mortgage Coach, and I combine financial coaching with mortgage advice. And I have helped hundreds of clients over the years with their remortgages, and also family and friends. And I've done it myself. I bought when I was in my early 20s, so I've done a lot of remortgaging over the years. Now, what is remortgaging? Remortgaging is when you're coming to the end of your deal. So normally when you get out your first mortgage, they'll say to you, you'll have a 2-year fixed or a 5-year fixed or something along those lines. 6 months before that is coming to an end, that's when you see someone like me, a mortgage advisor, to give you advice on what is the next best deal. People can also consider having a remortgage or additional borrowing, depending on what you're looking to do, if you want to release some equity out of the property. Now, equity is the difference between what the property is worth and what your mortgage is. Now, everybody buys property obviously because they want a home, but other people will buy property for investment purposes, and everybody just assumes that property will appreciate. So that is basically equity. It's when the property goes up and you're obviously paying off your mortgage balance, so that's going down, and the difference between the two gets bigger. And you can take advantage of this. I mean, I did it myself. I borrowed additional money in order to buy another property, and I've got a whole video about the let to buy strategy. But you can also borrow money if you want to do home improvements. Again, I turned one of my flats from a 1-bed to a 3-bed by borrowing equity. The other thing you can do is if you want to invest in land, if you want to invest in commercial properties, there's a lot of, if you want to do debt consolidation, there's quite a lot of reasons why you would actually do this. The other thing is if interest rates have gone down significantly and you're on a fixed rate that's quite high, you do need to look at early repayment charges. But sometimes if, say, you're on a 5% rate and it's gone down to 1%, you know, back in COVID days, a lot of people paid the early repayment charges and just moved because, you know, it was actually a fifth of the price that it was before, which made sense. So the next thing I wanted to talk about is when considering remortgaging. So the first thing is it's when it makes sense. So when the fixed rate period is coming to an end, or a change in financial circumstances. No, not just the rate like I was talking about, but for yourself. If you've actually got a pay rise, then you might actually be able to borrow more. You might be able to actually reduce the term. There's a lot of things that you can look at. A lot of people go for, you know, the 25-year fixed, the 25-year term, for example. But if your salary has gone up, or you've met someone and you want them to go on the mortgage with you, there's loads of different reasons why you want to do a remortgage. So it's definitely worth considering. Another thing is, and I've got a completely different video for this, but if you were had a shared ownership and you bought part of it and you wanted to buy more of it, that would also be considered either a remortgage or additional borrowing, depending on what your circumstances are. Now, a remortgage is when you change the existing deal completely for a brand new deal. Additional borrowing, or further advance, some lenders will call it, is when you keep the existing deal, you go back to the exact same lender and you ask them for additional borrowing. Now, depending on how much the property has increased, how much of the mortgage you've paid off, sometimes they will consider this. So it's sometimes worth just looking at the previous lender. Obviously, a mortgage advisor can tell you the best deal between remortgaging and just getting additional borrowing, but you can also check things out directly yourself. The next thing to look at is the different types of remortgage offers, they are very similar to the original when you're actually purchasing those offers. So you've still got the fixed rate and the variable rate. So what happens is when the mortgage deal is coming to an end, on the day it ends, you automatically go onto the standard variable rate, and that is the rate that the lender has decided is their standard variable rate. It isn't the Bank of England rate. The lender can look at the Bank of England rate and say, okay, we want to use this, or we want to use this plus 1%, or we want to use slightly less than this. It really is up to the lender what they decide to do. But normally it is higher than the deal that you're currently on. The next thing to consider is whether you'd want a tracker mortgage. Now, when you look at a tracker mortgage, that is very much linked to the Bank of England rate. So a tracker could be, it could be Bank of England rate plus 1% or plus 2 or plus 0.5%. Obviously, it depends on the lender, but the tracker will track the Bank of England rate and move with it, rather than the fixed rate will just be whatever new deal that you pick for whatever period of time. So when your first mortgage comes to an end, you could go straight back into another fixed rate deal for 2, 3, 5 years, sometimes 10, depending on your circumstances and what you want to do. It's always worthwhile speaking to a mortgage advisor because they can assess your affordability and they can assess what's best for you. There are not that many around anymore, but there are offset mortgages, and an offset mortgage is when when you've got a lot of savings, and you've got a lot of savings but you don't want to use them to pay the mortgage down, but you want to take advantage of them. So if you have your mortgage with the same lender where you have your savings and they offer an offset mortgage, that is when it would work. So what they'll do is they'll look at your savings and they'll look at your mortgage balance. So for say example, you've got a mortgage of £100,000 and you've got savings of 50,000. They will charge you interest only for 50,000 because you've got savings. The savings go against it. But the advantage of this is you can take advantage of only paying interest on your mortgage of 50,000 because you've got the 50,000 savings that's being sort of contraed off. But the other advantage is if something comes up like your boiler goes, or I don't know, an unexpected expense, you can dip into your savings and not have to go through additional borrowing and try and get money out of the property and all of that stuff, which can sometimes take time. You can, get instant access to your savings. Obviously check that out. Some banks will say the savings need to be 10-day notice period or something like that, but they are your savings, they're yours. So it is sometimes good if you've got a high amount of savings and you're trying to pay off your mortgage as much as you can and not have a lot of interest. It's worth looking at. So the next thing is the steps for when you're remortgaging your property. So first, I would always say review your current mortgage deal. Know exactly when it's coming to an end, know what interest rate they'll be offering you. They normally do send a letter, the existing lender. Ask for a redemption statement. That's the statement that will tell you how much it costs to actually redeem it. Then you can do a comparison. So you can go to a mortgage advisor and you can ask them, okay, this is what my lender is offering me as my remortgage deal. What is out there? So they can go and look across the whole market, depending on if they've got access to the whole market like myself, and always ask a mortgage advisor, by the way, have they got access to the whole market? Because some of them may only have an access to a few lenders, and then you want to get the best deal there is out there. I say deal because it's not just about the interest rate, it's about the product fee as well. Now some lenders will offer you a really, really low interest rate. I don't say really low compared to COVID, but really low compared to nowadays. But the booking fee can be quite hefty. Depending on the lender, it can be, £999 or it could be £7,000. You really do need to get your mortgage advisor to check that out. And yes, you can add it to the loan and pay it off, but how much would you be paying So you just need to sort of look into that. So after you've done that, then you need to make sure that you've got all your documents up to date, that you've been maintaining a decent credit score. So 6 months before you're going up for a remortgage, check your credit and start working on it. I mean, you should maintain it anyway, and I'm more than happy to do a video on how to maintain your credit or how to improve and build and repair your credit. Just put in the chat if that's something that you'd be interested in. So if you've enjoyed these points, please like, please subscribe, and let me know. So let me know your thoughts. Right, so after you have done all of that, you've decided on what mortgage you're going to go for, then you obviously apply for the mortgage. Now, if you're with a mortgage advisor, they will do it on your behalf. If it's you, you'll obviously be doing it direct, and then it's the normal process. So once you've put in the mortgage application, or the mortgage advisor has put in the mortgage application, then it's the valuation, and then you know, as long as everything checks out, they may ask to see a few documents, which if you're employed is normally pay slips and bank statements. If you're self-employed, it's normally 2 years of accounts, that kind of thing. If you're including bonuses, then they may ask to see your P60 to see, you know, what your annual bonus is. So it's the standard paperwork that you had before for your original mortgage, for your remortgage, and then they'll offer you your mortgage. Sometimes it will have free legal included and free valuation. You do need to check the actual deal. Sometimes you'll have to pay for those on top. But if you leave your remortgage and you haven't got that much of a turnaround time, then sometimes it's worth paying for the legal yourself in order to speed things up. So if you've got any questions, any comments, anything more things you'd like to know about remortgages, let me know. And as I said, there'll be more videos on the way. So if you want to have more videos about being a first-time buyer, being a first-time landlord, being a first-time remortgager, then by all means subscribe and click that notification bell, and then you'll be notified when the next video is. Thanks for your time. Take care. Bye bye.